Greetings, members, one and all of the Salivation Nation. Inflation is killing silver. Let's explore. Now that title, that headline, should grab your attention, mainly because most of us can pretty much agree with that synopsis. Inflation seems to be killing silver right now, and without the measure of history, it's very frustrating for many of us. Many of us feel that silver should be a lot higher than it is right now, all things considered, in the economic situation, geopolitically as well. These prices should be much higher than they are. But alas, it's not the case. I'm going to be referencing an article that was shared with me by a member of the community, the same title here from silverphoenix500.com. Inflation is killing silver. I don't know that I agree with everything in this article here, but I do like to look at a contrarian point of view from time to time. I think it's always good to be challenged, to challenge your line of thinking, to see where things are at, and to help bolster the case in your mind, one way or the other. I mean, I am a strong proponent of holding silver. Maybe even more so holding it than buying it at any given point in time. Although you will see, hopefully soon, there's been a lot of delays in these packages that I've ordered. But nonetheless, you will see here, patience is a virtue for sure if you're going to be buying silver and if you're going to be holding silver. But let's go through this and find out exactly what the message is and how we can interpret it. More than just a few people are buying silver because it protects them from inflation. That is what we've heard a lot from channels like mine and others, although I typically use the phrase, it protects us from economic instability, because I can believe it can protect us from runaway inflation as well as deflation, or any kind of economic instability. There's more to a bad economy, by the way, than just inflation. Ever wonder if that argument holds up? And the author here, Kelsey Williams, says the chart below indicates otherwise. And when I look at this chart, to me it does not indicate otherwise. To me, this proves the point. I did a video called 100 Years of Silver Prices Proves Silver's Worth. And I believe that even through a 50-year chart, it says the same thing here. This is a chart that shows silver prices over the last 50 years, and it's been adjusted for inflation. To me, on a first glance at this chart, it looks like it indeed does preserve your wealth, and it does act as a protection against inflation. So he says that according to the chart, it appears that the silver continues to be pressured downwards as inflation gets worse. Where is the fundamental or technical appeal in this kind of price action? Here's the same chart with the addition of a downward sloping line connecting the major silver price break points dating back to 1980. Silver price inflation adjusted, 50-year historical high in this chart here. But notice where he's drawing the line. He's drawing it from the peaks, the anomalies in the data. In other words, he's using those as metrics. And one rule that I have that I've been very consistent about, whenever you look at information like this, you always have to take into account where the analysis is coming from. Because you can take any two dates, and make any asset class, including silver, look incredibly like a great investment strategy, or make it like the worst thing ever. So in other words, he's taking the two highs here and saying, adjusted for inflation, and following that line down, it is not a wealth preservation tool here. Well, I could take that line and draw it from down here all the way to the top here, and that line will just continue on and on and on. This completely ignores these other peaks and through the data and what else we're seeing here. I'll get to that in momentarily. The article continues. Most investors don't consider inflation-adjusted pricing in their expectations or calculations for silver. That's very true. They don't. The argument given is that silver prices will go a lot higher as inflation gets worse. But there's no historical indication of that. Price-conscientious investors are usually looking at other charts, such as the one below, silver price 50-year historical chart. And there we can see here, it doesn't say it, but this is not adjusted for inflation. And the chart immediately above shows long-term uptrend in silver prices since May 1970, from $1.61 to $22.31 an ounce currently. It is possible to be swayed by the numbers, but the numbers aren't that good anyway. On an inflation-adjusted basis, the numbers are worse. Following for the effects of inflation, the increase isn't even 2 to 1. 22.31 divided by 11.96 is 1.86. How excited can anyone be to own an investment that has almost doubled over the past 52 years at a 1.2 annual rate of return? Well, and that's just it. Silver is a metal, and you look at the number of ounces for the price that you paid for it, I'd say that's actually really good. I'd say that's the argument for it, and it is preserving your wealth. Because you look at that, inflation by the target of the Fed is 2.5%, right? Or 2%. That's their target. That's what they're happy with. Now it's 8.5%. But regardless, if it's showing rising a 1.2% rate of return adjusted for inflation, that's profit, folks. That is actual profit. So, no offense to Mr. Williams here, but I'm interpreting it exactly the opposite way that he is on this. But I still agree with the headline, and I agree with it in the short term. The article continues. The effects of inflation have recently done considerable damage to longer-term holders of silver. And I disagree with that completely. For example, the average monthly closing price for silver in August 2011 was $41.76. The current comparable inflation-adjusted price is $52.99. So in other words, that was August 2011's high. That means that the current price of 47% lower than it was in August of 2011. And in inflation-adjusted terms, it is 58% lower. So the current silver price is lower than it was in August of 2011. That's right. Very true. But that's one date, one small anomaly where you're taking it and you're making it sound like, well, hey, there's the high, and adjusted for inflation, it's $53, and now it's half that or less than half that, 47% lower than it was, 58% lower, 58% lower adjusted for inflation. But that's one small anomaly. To me, those should never be considered. Those should be smoothed out and averaged out. But all we got to do is look at that chart. We're going to come back to that again momentarily. In chart number 3 above, this is a definite uptrend in nominal silver prices. Prices not adjusted for inflation. Here's the chart with the addition of that uptrend line, 50-year prices. Chart here 4. And there we see it there. The uptrend line is clearly defined. Even so, a drop in silver prices could go as low as $8 without breaking it. The $8 an ounce may seem far-fetched, but it is no more unrealistic than silver price projections of $100 an ounce or more. True that. It's very true. People make crazy predictions one way or the other. Whether the silver price is headed higher or lower from here is hard to say. It could go either way in the short term. In the long term, though, silver has lots of room on the downside. And I can't argue with that. It does have room on the downside now, especially in the next couple of months based off of some analysis that I've studied. Since its peak in 1980, silver has not matched the effects of inflation, let alone produced any real profits. Silver price history doesn't support current expectations for higher prices, but there are some painful examples of horrendous drops in price. And again, you're picking one other date and using that as a metric, as a guide to measure how it has performed poorly compared to inflation because of an anomaly. That's the only time in history, those 2 times in history, silver bulls have used those, or silver bugs, and silver bears have used those. Both sides have used them and to skew and to prove a point or to try to articulate a point, but it does not work. But anyways, what could cause silver to drop? Silver has a history of lower prices regardless of economic conditions. During the Great Depression, silver reached a low of 28 cents an ounce. Of course, keep in mind, measuring it from that particular point in time when silver was actually used in our currency, and there was a essentially kind of deflation in some aspects of it. It doesn't surprise me that would be the case. It was actually used in our money. Then several decades later, in the middle of the greatest period of economic growth in U.S. history, from 1980 to 2000, silver fell from nearly $50 an ounce to $3 an ounce. That's a drop of 94% without factoring in the effects of inflation. Currently, the arguments in favor of higher prices are not consistent with the tale of history. Any sustained movement in the direction of more moderate effects from inflation or the occurrence of deflation could take the silver price much lower. If U.S. economic activity improves to any measurable degree, it would not provide any impetus for a higher silver price. All factors considered, there isn't a strong argument for higher silver prices, and yet inflation continues to erode real value from silver as its inflation-adjusted price continues to weaken over time. But I disagree with that, and it goes back to chart 1. If you look at chart 1 here, of course I don't have the fancy tools to actually draw on this thing, but if you average this out, inflation adjusted, look where we're at. I would say that line would pretty much fall either relatively flat or, based off of his own information, it would have a rate of incline of about 1.2%. Let's look at what is that number here. He had it here. It's 1.2% annual rate of return. So it would be a slightly sloping line here in this chart with a 1.2% incline over these years. How is that not an inflation hedge? To me, he just made the strongest argument for silver being an inflation hedge and protecting yourself against inflation over the long term. But look at the jaggedness of these lines. And it goes to show you that these are inflations, right? These are recessions here in the gray areas here. And we can see that during these recessions, look what happens. Silver does fall. And then it climbs typically on the tail end of that recession, depending on when or in between recessions, that's when the price climbs up and during heightened economic activity. So there is some argument to be made there. And we can see here that there has been a drop here dramatically during this recession here in the 2007-2008 crisis. And then we saw a heavily uptick here into 2011. An anomaly here, but nonetheless, after this great climb here, we've seen new resistance at around this point, just under $20, which is why I feel fairly confident that if it does go below 20, it won't be much below 20 for any considerable amount of time. So nonetheless, that is where we are at now. We have reached new floors here, and if we look at that adjusted for inflation, it looks like silver's price is, to an extent, a little above where it should be, considering inflation. So there you have it, folks. Interesting article indeed, and fascinating analysis here. I just disagree with it in the long term, but I do agree with it in the short term and maybe even in the medium term. Inflation is killing silver, and it has done that in the past. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.